Small cap value stocks have outperformed every other segment of the market historically. Here we'll review the 13 best small cap value ETFs. Stick around till the end when I give my 3 specific picks for US, ex-US developed markets, and emerging market small cap value stocks respectively. So why small cap value stocks? Small cap value stocks have beaten every other style and cap size of stocks historically due to what we think are independent sources of risk. These are known as the size premium and the value premium, two of the Fama-French risk factor premia that explain the differences in returns between diversified portfolios. Here's small cap value versus other small caps and the S&P 500 from 1977 through 2022. Here are some more impressive stats illustrating the glamour of small value. From 1928 through 2016, the S&P 500 index had a CAGR of 9.7%, while small cap value stocks delivered 13.5%. Looking at 40-year periods since 1928, the average return of the S&P 500 was 10.9% compared to 16.2% for small cap value stocks. Unfortunately, the size and value factors have suffered in recent years, lagging the market. I don't employ or advise market timing, but AQR maintains that value is still basically the cheapest it's ever been right now, suggesting that now may be the worst time to give up on the factor and that it's due for a comeback. 2021 and 2022 were actually great years for small value, relatively speaking, so that comeback may indeed be happening. Fingers crossed. Now we'll go over the 13 best small cap value ETFs to capture the size and value factor premium. First is IJS, the iShares S&P Small Cap 600 Value ETF. IJS is one of the most popular funds for the small cap value segment, with nearly $5 billion in assets. This ETF seeks to track the S&P Small Cap 600 Value Index and was established in 2000. The fund has over 450 holdings and an expense ratio of 0.18%. A very similar fund to IJS that tracks the same index is SLYV, the Spider S&P 600 Small Cap Value ETF. This ETF also launched in 2000. It is slightly cheaper than IJS with an expense ratio of 0.15%. Of interest to day traders is the fact that spreads may be slightly larger for SLYV than for IJS, since this is a slightly lower volume ETF than IJS. The third and last ETF that tracks the S&P 600 Small Cap Value Index is VIOV, the Vanguard S&P Small Cap 600 Value ETF. Similar to SLYV, this ETF also has an expense ratio of 0.15%, but is less popular. Any of these 3 funds would be a fine choice to track the S&P 600 Small Cap Value Index. Their factor loadings and historical performance are nearly identical. As an added bonus, the earnings screen from the S&P index conveniently provides some decent exposure to the profitability factor as well. Dimensional Fund Advisors, or DFA for short, is usually the gold standard in the space of factor tilts in terms of investable financial products. A few former employees of DFA started a company called AVES, which recently introduced some new funds for retail investors. Of interest to us here is AVUV, the AVES US Small Cap Value ETF. Previously, the S&P Small Cap 600 Value Index via IJS, VIOV, or SLYV was the go-to index to capture US small cap value stocks. AVUV is a relatively new product, but in its short lifetime, it has achieved demonstrably superior factor exposure, and while it shouldn't mean much, it may also comfort you to know that it has outperformed its competitors on this list in its short lifespan thus far. In a nutshell, AVUV has been doing a great job of capturing very small, very cheap stocks with strong financials. Because of this, AVUV replaced VIOV in my own portfolio. VIOV has an expense ratio of 0.15%. AVUV's expense ratio is 0.25%. This difference of 0.10% is worth it for the better factor exposure in my opinion, and AVUV would be my choice from this list for US small cap value. Next up is DFSV, the Dimensional US Small Cap Value ETF. DFSV is a relatively new small cap value fund from Dimensional that launched in early 2022. It is very comparable to AVUV and would also be a great choice for the dedicated factor investor. DFSV and AVUV could even be considered a good pair for tax loss harvesting. DFSV still costs a bit more than AVUV though, at 0.31%. Those seeking broader diversification in the small cap value segment may desire to invest in the Russell 2000 Value Index, composed of 2,000 small cap value stocks, for which IWN, the iShares Russell 2000 Value ETF, is the most popular fund. This ETF has nearly 1,500 holdings, over $8 billion in assets, and an expense ratio of 0.23%. Investors deciding between the S&P Small Cap Value Index and the Russell 2000 Value Index don't have to make any trade-offs in terms of factor exposure for size and value. But of course, IWN is more expensive than those first 3 we covered. The iShares Russell 2000 Value value ETF and the 3 ETFs for the S&P Small Cap Value Index earlier have near identical loadings on the size and value factors, though note that the S&P Index employs an earnings screen, so those first 3 ETFs have comparatively more loading on the profitability factor than IWN. Day traders will appreciate the high liquidity of IWN. Another ETF that tracks the Russell 2000 Value Index is VTWV, the Vanguard Russell 2000 Value ETF. This fund is cheaper than IWN with an expense ratio of 0.15%, but has a much lower AUM of only about $350 million. Next on our list is VBR, the Vanguard Small Cap Value ETF. VBR used to be the cheapest on this list with an expense ratio of 0.07%. The fund seeks to track the crisp US Small Cap Value Index and has nearly 900 holdings. Note that this ETF is not a pure small cap value play, as it has some exposure to mid caps as well. This may be desirable to investors seeking a value tilt across multiple cap sizes. This ETF also has comparatively smaller loading on the size, value, and profitability factors compared to the previous funds. In other words, VBR is neither very small nor very value-y. iShares came along in March 2021 and undercut Vanguard's VBR by 1 basis point while providing superior exposure to US small cap value stocks with ISCV, which was formerly JKL, the iShares Morningstar Small Cap Value ETF. For those who for some reason only want the cheapest fund, ISCV seems to be it and is a clear winner over VBR. All the funds we've discussed so far have focused on US small cap value stocks. Those seeking international small cap value exposure can do so with DLS, the WisdomTree International Small Cap Dividend Fund. This is probably a prudent move, as the small cap value premium has been larger and statistically stronger in international stocks outside the US. DLS tracks the WisdomTree International Small Cap Dividend Index and has an expense ratio of 0.58%. This index is composed of small cap dividend stocks in developed countries outside the US and Canada. Historically, this fund has arguably been the best proxy for retail investors to access the size and value premia outside the US. WisdomTree uses some liquidity screens to weed out stocks that aren't investable, so DLS's holdings are not really as small as we'd ideally like to see. These screens, as well as the fund's weighting by dividend yield, also ends up causing it to be concentrated in a small handful of countries, namely Japan, the UK, and Australia, which comprise over half of the fund's assets. Avantis also introduced AVDV in late 2019 for ex-US developed small cap value at a cost of 0.36%. This is effectively the same segment targeted by DLS. In its short lifespan thus far, AVDV has delivered impressive exposure comparable to that of DLS and would thus be a fine choice for small cap value in ex-US developed markets. If you already own DLS in a taxable account, AVDV provides a great alternative to harvest losses with. AVDV would be my choice for a small cap value fund for ex-US developed markets, and I own it in my own portfolio. DGS is the emerging markets version of DLS. It also has the same fee of 0.58%, but investors seeking a diversification benefit will appreciate the slightly lower correlation of DGS to US small cap value compared to DLS. For a dividend fund, DGS provides some very impressive factor exposure. Like DLS, DGS ends up having concentrated exposure in just a few countries. In this case, Taiwan, Hong Kong, Korea, India, and Thailand, which account for about 75% of the fund's holdings. DGS is my choice for emerging market small cap value, and I own it in my portfolio. As you might expect, Avantis also created an option for targeted factor exposure in emerging market stocks. That fund is AVES, which launched in late 2021. This may seem like the obvious choice considering my comments on Avantis's other funds, but in this case, DGS from WisdomTree still seems to provide superior factor exposure, albeit somewhat naively. In other words, DGS appears to be holding smaller, more value-y, more profitable stocks than AVES. I already owned DGS when AVES launched, and I don't feel the need to switch, but that doesn't mean AVES is not still a fine choice for this narrow market segment. Avantis fans will also enjoy the comparatively lower fee here of 0.36%. So to recap, my personal picks are as follows: AVUV for US small value, AVDV for ex-US developed market small value, and DGS for emerging market small value. If you want an example for how you might weight these in a portfolio, you can check out my own portfolio on my website. All these small cap value ETFs should be available at any major broker. Do you own any of them, or are you planning on buying any? Let me know in the comments. Thanks for watching.